In recent events, there has been growing controversy surrounding Elon Musk and his $44 billion Twitter acquisition. Elon, who previously did not show up for a testimony in a probe related to this deal, now faces calls for sanctions from the SEC. It's interesting to note how Musk's stance on many issues, including free market ideals, has sparked intense debates. And in this case, someone who once revered his views has now become one of his fiercest critics. A person named Mark, based in Tennessee, once told me that the book that had the biggest influence on him was *Atlas Shrugged* by Ayn Rand. I bought him a $4,000 first edition copy of the book because I admired how strongly he believed in the principles of minimal government regulation and individualism. Interestingly, now he seems to have adopted a stance that aligns with the antagonist in that book. He's becoming increasingly motivated to challenge Elon Musk, who was once a hero to him, in the hope of taking control of the SEC, perhaps as a means of defeating Musk. This shift in perspective is quite perplexing. Mark once viewed himself as a free market rebel, someone who opposed excessive government regulation, but now he appears to be advocating for the very kind of control and regulation Musk fights against. What would cause such a dramatic change? Is it a realization that Musk is unbeatable and perhaps an overwhelming envy that drives him to seek power within the SEC? There's certainly something strange going on here, especially when we consider the context of Tesla's past. Back in February 2018, Musk negotiated an incredibly risky deal with Tesla, stating that he would not take any compensation unless he could significantly grow the company. At the time, Tesla was the most shorted stock in the NASDAQ 100, with a staggering 22% of its stock being shorted compared to an average of just 3.5% across other stocks. Musk took an extraordinary gamble, opting to receive no pay unless Tesla reached certain milestones. His compensation would only come into play if the company succeeded beyond anyone's expectations. Tesla's challenges back then were immense. It had massive debt, it was struggling to meet production goals for its Model 3, and the company was burning through cash at an alarming rate. Analysts were doubtful, and the market was skeptical, yet Musk's gamble paid off. The stock that had been shorted so heavily started to rise, and Tesla began to defy expectations. In 2018, Tesla's market cap was just $59 billion, and Musk's compensation was tied to ambitious performance targets, including reaching a market value of $650 billion. At the time, this seemed impossible. Who could have predicted that Tesla, a company once plagued with challenges, would see its value skyrocket? But Elon Musk, through his relentless work and vision, helped propel the company to new heights. He didn't just achieve those targets, he shattered them. Shareholders, despite all the skepticism, voted overwhelmingly, 73%, in favor of the compensation plan Musk negotiated. Yet now, years later, a judge in Delaware, appointed by Governor John Carney and affiliated with the Democratic Party, has ruled that Musk should not be compensated for his efforts, even though the shareholders agreed to the terms. This ruling has stirred controversy, especially given the remarkable success Musk has achieved for Tesla and the billions of dollars he has generated for the company and its investors. The numbers speak for themselves. Tesla's stock value soared from around $59 billion in 2018 to over $650 billion in recent years, with a net income increasing from a loss of $21 billion in 2018 to a profit of $15 billion in 2023. Yet, despite this tremendous success, Musk has not received the compensation he was promised under the terms of the deal, largely due to this court ruling. What's even more interesting is that the judge in this case has the authority to override the wishes of Tesla's shareholders, even when they voted overwhelmingly to approve Musk's compensation. Tesla's shareholders, including major institutional investors like Vanguard, BlackRock, and State Street, support paying Musk the agreed-upon sum, which could total up to $56 billion, considering his success in increasing Tesla's market value. But despite this, the Delaware court is questioning whether Musk should be entitled to the payment, even though the shareholders and the terms of the contract were clear. In the face of these challenges, Musk remains undeterred. His drive to succeed, and his belief in his vision for Tesla and the future of humanity, including his goal of making humanity a multi-planet species, are what fuel him. Despite the difficulties he faces, Musk continues to push forward, and his supporters understand that his aspirations are about much more than just money. He has stated that his motivation is not for dynastic wealth, but to contribute to humanity's long-term future. Musk's vision for a trillion-dollar company, one that could significantly impact various industries, is something many believe in, and despite the legal hurdles, he remains focused on his long-term goals. For context, Tesla's top shareholders, including Elon Musk, hold significant stakes in the company. Musk himself owns roughly 23% of Tesla's shares, while institutional investors like Vanguard, BlackRock, and State Street also hold substantial amounts. This makes the situation even more complex. Musk, who has played a pivotal role in Tesla's success, is facing opposition from both the legal system and certain critics, even though he owns more shares than the largest institutional investors combined. The dispute over Musk's compensation highlights a broader issue in corporate governance and the intersection of shareholder interests, executive compensation, and judicial oversight. When a judge in Delaware blocks a compensation plan that was negotiated and agreed upon by the company's shareholders, it raises questions about the role of the judiciary in corporate affairs. Some might argue that if shareholders vote to approve an executive's compensation based on their performance, that decision should be respected. Others, however, believe that courts should have the authority to step in when they feel a decision is not in the best interest of the company or its stakeholders. In 2018, when Elon Musk predicted that Tesla could become a trillion-dollar company within a decade, many thought he was delusional. Back then, Tesla was struggling and the stock was being shorted heavily. Yet Musk's vision and ability to turn things around have been nothing short of remarkable. Tesla's valuation has grown exponentially, and Musk's compensation package, tied to the company's performance, reflects that success. However, despite the impressive growth and achievement of these milestones, Musk has yet to receive the compensation he was promised due to legal challenges. This situation raises important questions about fairness, corporate governance, and the role of the judiciary in determining executive compensation. Musk's critics may argue that he should not be entitled to such a massive payout, but his supporters contend that his compensation is well earned, considering the extraordinary success he has achieved for Tesla. Elon Musk's story is one of defying the odds, taking risks, and challenging conventional wisdom. His vision for Tesla, SpaceX, and his other ventures is shaping the future of technology and space exploration. Despite facing legal challenges and opposition, Musk's determination and resilience continue to drive him forward. His story serves as a reminder that in business and in life, success often comes to those who are willing to take risks, challenge authority, and stay focused on their long-term goals.